Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, January 30th, 2023. Thank you so much for watching. Well, it's not very sunny outside right now, but we've got some pretty sunny reports in the real estate market. All signs are pointing for a great spring and a great 2023. Here's a quick look at your McHenry County numbers for the last 7 days. We had 96 new listings. We have 107 go under contract. We had 63 closed sales, 32 price changes, and 38 on the private network. Now, some of these numbers are about the same as last week. Like the price changes are about the same. Private market hasn't changed a whole lot. New listings are up slightly. Last week, we only saw 91 new listings. This week, we've got 96. Under contract are up slightly for the last 3 weeks. We had 107 go under contract. Last week, we only had 100. And the week before that was 98. So just, little ticks upward, which for January is great. And keep in mind, under contract properties are still higher than the new listings. So we've got 107 going under contract and 96 new listings. And some of those new listings, you have to remember, are relists. People who or agents are canceling an old listing and then making it new to get more activity. So the fact that we've got 107 under contract, we've got more homes going under contract than we have getting newly listed. So again, with that, I'm a broken record here. We've got low inventory, we've got interest rates that are stabilizing, and we've got improving consumer sentiment. Over the weekend, some of the headlines that were out there were just preaching all good news pretty much. Headline for Axios.com was the housing market wakes from the dead. Other headlines, usnews.com, home sales rise unexpectedly in December as consumer sentiment improves. CNBC put out 92% of millennial homebuyers said inflation has impacted their purchase plans, but most are plowing ahead anyway. So what's happening? So again, I've said this over and over again, that we've got rates that are stabilizing, and we've got inflation reports coming in more positive. So the shift is all about mortgage rates and inflation reports. Rates peaked in November at over 7%, but they have come down, and the average 30-year fixed rate now, according to Freddie Mac, is 6.13%. So that's the lowest level since mid-December. So interest rates are coming down and they're stabilizing. So buyers are coming to terms with the fact that they are not going to get 3% interest rate. They're never going to see that again. And 5s and 6s are okay. We have to remember that the historical average for mortgage rates is 8%. I asked somebody over the weekend, I said, what do you think the average mortgage rate is, historically speaking? And they said 4. And I was like, it's 8. People don't realize, well, some people don't realize that their parents and their grandparents were getting mortgage rates in the 80s that were 18%. So 8% is the historical average. Now, I don't know that we're ever going to see 8% again. That's pretty high. But we are seeing 6s as a very reasonable, and that's a reasonable rate. That's a good rate. So take it as a win. Other things that are happening. The GDP rose at an annual rate of 2.9% in the fourth quarter, as the government reported on Thursday, which was better than expected. So again, some of these numbers are not fantastic, but they're better than expected. We have a recession mindset going on where people are talking recession, and it sort of becomes a self-fulfilling prophecy. But what we're seeing is that is not necessarily as bad. One thing I always mention is there was a recession in the 90s that most people didn't even know happened. So there are a lot of recessions that are, yes, technically it's a recession. What is a recession? It's two GDPs, so 2 quarters of GDP being in the negative. Well, we had that in first and second quarter of last year. So just because there's a recession doesn't mean it's like the earth is going to fall off its axis and the sky is going to fall. It just means that we're not maybe in this, huge economic boom. And anytime that you have a boom, it's followed by inflation, followed by a recession. That's how that goes. It doesn't mean that everything's going to fall off the wagon. So American Express CEO says we aren't seeing recessionary signals. So things just aren't as bad as they were thought that they were going to be. There was a lot of doom and gloom predicted about 2023 in September, October, November, and that's just not proving to be the case. A couple other things. The low point in the home sales is likely over, according to Lawrence Yun. The median sales price saw a jump last week to $275,000, up $15,000 from this week last year. So we're seeing lots of positive reports. Pending contracts were up 2.5% in December, month over month. It doesn't sound like a lot, but it was the first month in 3 months that was positive. So we're seeing an upward trend. So a couple other things that I've seen just out in my, dealings with people out and about. Over this weekend, I talked with 3 new people who are talking about buying and selling this year. They want to transact. One was a couple that I met that own a home. They bought a home in 2017. Good time to buy. They've got about $100,000 in equity. So they know of a neighborhood that they really like and a couple of their friends live there and they really want to move there. So is interest rates at 6% going to stop them? Not when they've got $100,000 in equity and they know it's a good time to go. So that's one situation where people are still moving. I've got another client or people that I talked to over the weekend who own a current home. They have a condo. It's a 3-bedroom, 2-bath. And they like it, but it's just too small. They need something bigger, and they can afford a lot. Their income has gone up over the last few years since they bought that place. They can now afford a lot more. And again, they've got some equity in their property. So it's time to move for them. I can tell you these stories day after day after day where sellers have enough equity that they want to move ahead and buy the next home. And as I say all the time, the motivation for moving is always going to be the number one indicator of why people move. Finances is always second. It's not that people are making poor financial decisions, but the motivation is going to outweigh a good financial, if it's not maybe, an interest rate. Okay, I don't want to say a financial interest because that's always going to be important. But the finances make sense when you've got a lot of equity, even if the interest rates are higher. So that's what's going on in the real estate market. I'm moving and shaking. I got listing appointments this week. I got buyer appointments this week. We are going to have a great spring. We are off to a great start in January. I'm feeling really positive about 2023. So that's a look at your McHenry County statistics and your Monday market update. I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. If you have any questions, please always feel free to call me. I'm at 815-529-0777. You can call, text, email. I'm at mirandaaltteam@gmail.com. Have a great rest of your Monday. Bye-bye.